The 2024 US election is here, and with all the chaos and uncertainty as to who will take the race, there is one certainty: Bitcoin has already won. Let me explain. So, since July, Bitcoin's price is tracked directionally with Donald Trump's odds taken from Polymarket. So, for about 4 months since the assassination attempt, as Trump's odds have shifted, so too has Bitcoin's price. It's kind of been serving as a proxy for the likelihood of a second non-consecutive Trump term, and it's no secret as to why. Take a look at this chart. Trump's platform, of course, is explicitly pro-Bitcoin. He's outlined policies to prioritize the U.S. as the world's most Bitcoin-friendly economy. And his plan includes establishing a robust environment for Bitcoin mining, stopping CBDC development, firing Gary Gensler, and creating a strategic Bitcoin stockpile to help manage the $35.86 trillion in federal debt. Take a look at Trump's odds in red and Bitcoin's price in white. Kamala Harris's odds inverse to Trump also inversely track Bitcoin's price. Now, zooming into today's trading, this relationship is even more visible. So since the day began, Bitcoin has been tracking at least directionally with Trump's odds taken from Polymarket. And until the polls close, Bitcoin's price is likely going to remain an accurate real-time gauge of Trump's standing. And this correlation, again, underscores that investors are heavily preferring a Trump presidency to a Harris one, given his pro-Bitcoin platform. But this correlation does not paint the full picture. Okay, Bitcoin is geopolitically neutral, but it's also a mathematical certainty in light of widening fiscal deficits and accelerating monetary debasement. So while Trump's stance is the most positive for Bitcoin, especially in the near term, the reality is that both would-be presidents will face the same fiscal and monetary problems that are current in the United States. U.S. debt now stands at an eye-watering $35.86 trillion, and debt issuance is accelerating. This chart here displays the 2-year U.S. Treasury yield, our federal interest expense, the federal debt, and the deficit. Let me walk you through it. So the 2-year yield has climbed from 25 basis points, 0.25%, to nearly 4% since 2021. And this rise, as the Fed has hiked its policy interest rates, has led to the annual interest expense on the national debt to soar to over $1 trillion, $1.096 trillion to be exact, and is now the second largest budget item behind Social Security for the United States government, surpassing even our national defense budget. Now, reducing debt through spending cuts would trigger a recession on a scale not seen since the Great Depression. And that's because the federal deficit is 7.21% of GDP, which is the widest we've ever experienced during a non-recession period. The U.S. can't cut spending without cratering GDP growth. So instead, the Treasury and Fed have elected to keep rates negative relative to inflation and let debt devalue over time. We've seen what happens when they try to raise interest rates. The U.S. interest expense more than doubles. And so this is their only option, and it's an option that favors asset price inflation, where Bitcoin, which is highly sensitive to the global money supply, stands to benefit the most as the deficit widens and the Fed increasingly becomes the marginal buyer of U.S. Treasuries as issuance accelerates. Now, shifting gears over to this second chart here, this shows the 10-year yield, Fed funds, and Bitcoin. The 10-year U.S. Treasury yield, proxy for growth and inflation expectations, has climbed 68 basis points since the Fed's 50 bips rate cut on September 18th. And over that same period, Bitcoin has climbed from 60K to 70K. And gold has had a similar rally as markets brace for a potential growth in inflation reacceleration and allocate to the proven hedges against it. The next chart, which is already up on screen, shows tens in the top pane, Fed funds in the middle, and Bitcoin's price at the bottom. And you'll note that when the Fed cut, tens, which are growth and inflation expectation, have been on a meteoric rise higher. And the red dashed line marks where the Fed cut by 50 bips. And with another 25 basis point cut expected at tomorrow's FOMC meeting, Bitcoin will continue tracking this inflationary environment. So regardless of who wins, the global easing impulse from central banks has been set in motion, and Bitcoin stands to gain. Now, the final chart that I have for you here highlights the deficit as a percentage of GDP segmented by party in power since 1969. And the pattern is clear. Deficits have persisted since 2002, and they're set to widen no matter who takes office. Inflation will continue to be the chosen route to manage our debt load, bringing asset prices up with it. Bitcoin stands as the most responsive asset to these conditions. And so the deficit widens either way, right? The realities of the U.S. interest burden don't evaporate following a Trump or a Harris victory. And treasuries will continue to be issued at an accelerating pace in order to fund the U.S.'s out-of-control spending. of which the interest expense is nearing existential levels. You need to study this chart and understand it, because red or blue, the debt grows, the deficit widens, and ultimately, as a result of that, Bitcoin continues to serve as the single greatest check on monetary and fiscal foolishness known to man. So with U.S. economic growth increasingly reliant on debt over time, the Fed will monetize more of it and expand the money supply in doing so, pumping asset prices, of which Bitcoin is the most sensitive. So Bitcoin is here to stay, and it's ready to ride the fiscal and monetary tide no matter the election's outcome. So that's why I say Bitcoin wins the 2024 U.S. election. That's all for today's video. Thank you so much for watching. If you found value in it, make sure you like and reshare, as well as checking out Theia, T-H-E-Y-A, the world's simplest Bitcoin self-custody solution. You can find it at theia.us. Thank you so much for watching. Have a great night, everybody.